According to a State of Banking report by the Kenya Bankers Association (KBA), non-performing loans have been on the increase in the last 5 years, with the loan rising by 12% in 2018. The report attributes the rise in non-performing loans to misuse of credit funds by SMEs who use a large part of the credit on recurrent expenditure instead of expanding their businesses.
We are, I think, leading through the usage of technology to ensure that many of the people in Kenya are actually financially included. That simply means utilizing the partnership that exists between the financial market players to enable people not only access but use financial services.
The bankers are urging financial institutions to create mechanisms that can enable them track how SMEs spend their loans.
Now the next level, and this requires much more work, is to ensure that that usage is optimal in a manner that it enables welfare enhancement and business and enterprises usage of capital in a manner that promotes growth.
They come to that to this debate with that. Am I going to get a mortgage at an affordable price? Am I going to get my banking services at an affordable rate and XYZ? And that, for the most part, policy and regulation has not been able to deliver that in ways that you'd argue.
They called for more training of SMEs on efficient loan management. Banks and financial institutions were urged to diversify their products in a bid to promote financial inclusion, a move the bankers say will help grow the sector. The bankers lauded the move to remove interest capping, saying it had suppressed lending, affecting the SME sector and general investments in the long run.
From an investor perspective, the investment case for these banks has diminished as a result of the rate cap. And also because when we are looking at these banks as potential investments, we look at not only the return on equity, but the cost of equity. And so we find that since the rate cap came through, a lot of these banks' return on equity is below the cost of equity.
When you look at the rate cap and what happens if something, if it's amended or repealed, what happens to the yield curve? Because that's also directly, I think, what Sahil was also talking about with respect to cost of funds in the banking sector. I would expect the National Treasury to play hardball for a few months, meaning rejecting bids, tapping auctions.
Financial inclusivity, investment, and the interest rate cap are some of the factors that shape the status of the banking industry in Kenya, which the Kenya Bankers Association say is on the right trajectory in its latest report. Brian Itava, Channel One Business.